few minutes after 12. Appreciate all of you guys coming today. Glad you're here. My name is Michael Oldham. This is my wife Amy Oldham over here. We are the Oldham team. We are brokered by EXP. This isn't EXP recruitment or anything. This is just trying to bring you guys value. That's all I want to do. Amy and I have been in real estate Amy's been in the mortgage business for well over 20 years. I got into real estate 8 years ago after being a high school coach. And after being in it for 7 to 8 years, I felt like I was finally ready to start leading some events to bring my network of people that hopefully offer you value. So, Amy, you go on to the next one. This is Amy and I's contact information. I'm sure you've got invites and things, but if you ever need anything, you can certainly reach out to us. As I said, I was a 20+ year high school educator, girls basketball coach, finished up at McKinney North, started in Wiley, Texas. Been doing real estate for 7+ years. June will be my 8th year. I started at Keller Williams. There for 5 years, and the last 7 years we've been at EXP. I consider myself a lifelong learner, being an educator, so I'm always trying to read as much as possible and learn as much as possible. Next, just talk about our sponsors real quick. So like I mentioned before, we're going to do 51 of these lunch and learns this year, every single Tuesday, noon to 1. You probably be getting Eventbrite invites every week for them, but we just have a group of scheduled speakers to come up all throughout the year. We're doing next week going to be a social media branding. Basically, someone that works with an ad company building ads for agencies, talking about building your brand. The last week of this month, we're going to have a CE class, actually over marketing. So it'll be some CE offered on that. In February, we have Kyle Draper, which is a local social media video coach. He is coming the first week of February. Also in February, we have an attorney with capital title. It's going to be because February 1st, if you don't know, is the updates for the new contract start February 1st. A lot of you won't realize that probably for 6 months. But on February 28th, I believe the last date in February, we'll have an attorney from Capital Title will be presented back. So that's kind of my plan throughout the year. It's each week bring you something different off the bat. So our room sponsor for this rally room here each week is Chris Madrid and Rock Home Loans. They're at the office here. Chris is also going to be our presenter today. Here's all his information. I also put it on a little handout notes for you. All right, our lunch today is sponsored by Capital Title. Brittany Colbert cannot be here today, so he will be speaking as well. So Capital Title, we've been running our business with Brittany over the last year. She's done a great job for us. At this time, I'm going to let Vika come up and speak on part of Capital Title.
Brittany and I are partners. She is contracts to close, but she's eating right now. So we want to meet her with her family. So, we try to find a time during the year where we are not super busy. And of course, we get super busy week to week, but always, that's why we make her leave. But I'm just going to go over a little bit about title, not about title, what sets part of title. I think we don't have title company then, but what sets part of title is we have 103 plus offices for you. Whatever's most convenient, South Lake, Dallas, Fort Worth, Arlington, Frisco, Plano. You drop your earnest money or your client, drop your earnest money, anything at whatever office is most convenient. That office overnight, wherever you need to go. You don't need to drive all over the Metroplex. We also have free mobile closer, free mobile notary, our mobile closer. We even have our own couriers for a courier company. They work for Capital Title. That way we don't have to pass along any third-party charges to you all. I know right now title companies are having people pay their mobile notary. We're not COVID anymore. But we are mobile notary going to support Capital Title. Another thing that's part is Lindsay, who's probably said one, not over there. She, my assistant, we work so well together. She does everything, creates all these amazing things for you, open house flyers, help you with open houses, water bottles labeled, the flyers printing in color, getting whatever you need, snacks, if you need property profiles, whatever you need under listing, let us know, we'd love to help you. Also, if you're helping the buyer, we can help you. We have a net sheet app, which is free for you. And if you also aren't comfortable running your own net sheets, our codes are free. You can record you. So that's great. But we have buyer, seller, and relocation guide. Do you have the factor? Please drop the buyer. This is one of the backgrounds we have. We also have the Dallas skyline as another option for you. But wherever you see my picture and my logo, you'll have your picture and your company logo. We have one for buyer, seller, and reload. Like I said, if you have a biography page, if you have a vendors page, if you have Google reviews that are great, go send them to Lindsay. She can make your Google reviews look all pretty, all on one page. And then she can get that page looking great and in the front of your buyer's booklet, because we know how powerful reviews are. So if you've got great reviews, let's put them in the front. So if you want reload stuff, buyer, seller, and it's not something that we provide on our website, everything we have, ctot.com, Texas, tools and resources tab has every marketing piece. You're welcome. You know, we have buyers, for buyers that like private school ratings, public school ratings. We can actually get these to go inside of this. So if you want to provide it separately, you can. If you want to include it in binder, you can, and booklet. So whatever you want, like I said, totally customized. If there's stuff that you have that you've created, you can send it to us and print and bind what you have. If you already have a buyer seller list. For those luxury listings you've got, Ms. Lindsay can create a beautiful 8x11 printout that for luxury stuff that you know we have in the kitchen, people can grab and go. So again, we just want to make you look good and attention for business. So I am going to have this in the back for y'all to kind of look through. But this kind of tells you what we can do, shows you some examples of the things that we do. Lindsay can create pop buys for you. Amy's going nuts without your business with, if you do bring us individual bags of peanuts, she can make you a tag. Lindsay can create a QR code. Create a QR code for you. That QR code can have any website you want on for free. Now your company, if you do a side business, you can have Kristen's loans on it, whatever you're comfortable with. We can put that on your QR code. That QR code can go on your sign, your postcard, your business card, anything. So that way, the way that she does it, as soon as you take a picture of the QR code, automatically become a contact in their phone. They don't have to click or do anything. It's actually really cool. It's not one that it just shows everything that they have. It automatically makes them a contact. The other thing that Lindsay is phenomenal at. So here's what the Google reviews looks like. Somebody sent her a bunch of theirs and she put them all together to go with right. But we have a Cricut machine. So if you want to go on Amazon and say bulk, travel mugs in bulk and bring us 30 cups. Lindsay has a Cricut machine. She can put your logo on the side of the cups. If you have closing and you want to put your clients' names on the cups, if you already have logo cups, or if you have coaster, anything, you can bring us a wine basket, you can bring us a wine chiller. Anything that you want to bring us, you can put your logo on it, client's name on it. People love seeing their name on it. If I love people coming in our. So we got a wine basket and bring them that one, you can logo it, put your name on it. You can fill it with a bunch of goodies. We can help you fill it, so we can help you close the gifts. If you want to do direct gifts to the client, pop buy gifts, anything that wanted to make you look good. So we pay for the vinyl, we vinyl, Lindsay vinyl, she spreads it all. If you just bring us the item, we'll do it for you, or those tabs. So like I said, extension of your business. So if you need help in farming, we also got a guy named Joe Herrera who works exclusively for Capital Title. He can go over MLS Touch with you, if you haven't heard of it, it's phenomenal. Matrix Remind, you're paying for it, your realtor dues, not everyone knows how to use it. Joe can sit down with you one-on-one. He can meet you anywhere at Starbucks or whatever, or you can do it over Zoom. But he can teach you how to do all that stuff, so you don't have to worry. He can sit down and do it for you. So I kind of like to do it one-on-one with him because he does support. That's an, and like Amy and Michael mentioned, we have attorneys on staff, legal guardians, special provisions. If you need any of that, we can do that for free for you. Let me know. Yeah, I just want to be an extension of your business, all the big postcards, so when you do buy or sell property with us. I get the front, you get the entire back, it's 100 postcards for $56. If you want to do more than 100 postcards, we'll prorate it for you, just many as like. We pulled 100 houses, sort of rated, created, we mail it, we post it, we do everything. So you just let us know, hey, 100 postcards, I just posted. If you've already closed a house with Capital Title last year, and you were maybe even on the back end, you didn't choose to close with us, which you did, we are still happy to do those postcards for you. So let me know, we've got the afternoon class, I'll be back. I will be here the whole class, I'll be hanging out, so if you have any questions, I'll be here to chat with you after, I will have business cards on that table as well. And is there any questions? Perfect. We have training rooms like this too, in our offices, Plano, Bristol, Dallas, so if you want to do buyer seminar, client appreciation party. Anything like that, we're happy to host that, as well as networking or anything else. Whatever makes you look good, you're not closing, we're not closing, whatever we can do to help you get to that finish line and close and grow your business bigger, save your money and your time is kind of where we like. Thank you for having me. Thank you.
So earlier when I talked about the Golden team is actually Amy and I, and then all of our vendors. And so I highly recommend if you're new to real estate, if you're not new and you haven't done so yet, build your team of vendors around your business so they can certainly help you. So another member of the Oldham team, we consider Chris Madrid, which is going to be presenting today. Like I said, I got into real estate 7.5, almost 8 years ago. Chris would have been, and Mika actually, some of the first vendors I met. And Chris I've been working with for all of that time, referring my buyers to him. He did my personal loan. So Chris is in the top 1%, he's a well-known top mortgage originator. Why is that important? Because if you've got a buyer, you call a listing agent, and you want your lender to reach out to that listing agent, it helps that listing agent knows who that person is. And if Chris has done enough business, he's been in the business for 21 years in this DFW market. So he knows a lot of the listing agents. So I know when I asked him to pick up the phone and make a call for my buyer, that the listing agent is more than likely to know Chris from his previous experience. Also knowing Chris over these last 7.5 years, I know he's always improving himself, learning from leaders in the industry. He's always working with the top company. And then he takes pride in his 15-day clear to close. So once you've executed a contract, he takes a lot of pride in having a clear to close in 15 days. So for you, you're not sitting around 2 days before closing, hoping that you're going to be clear to close. I guess 2 days before close, you're trying to late. So anyway, Chris has been married 17 years. His beautiful wife Linda is probably better 80%. 50, and he has 3 children, 2 boys and a girl. And today he's joined by Aaron Town. So they are going to do Mortgage 101, go over some of the pitfalls that we face, and take it away.
Awesome. Well, hey, Douglas, these are always very insightful, right? Because no matter how long you've been in the industry, there's always something you learn, right? From the change. So, Aaron and I, we've worked together at another mortgage company. We might take a look together now. Both have been in the industry a long time. Right? So, what we do, right, is only one part of the mortgage transaction, right, from start to finish. So having an excellent back end computer, right, which is process. That is just as equals a big part of the process. So we have Whitney with us every day, so she does all our back end stuff and kind of keeps us on our toes. Great. And, no, all right, well, we're going to go through pitfalls. And we're here in just a second, pitfalls, and then also just one-on-one with our this. As long as I've been doing the things change all the time, so it's good to run through that. You have this part?
Sure, yeah, so just a little bit of background on Caprock, just you may or may not have heard this, we are. Relatively a newer company, but as far as all of our loan officers, I mean, we probably have. Well, over 100 years experience, yeah. Basically, our owner, Adam Goldberg, just decided he was tired, and we were tired, I worked at us. 2014, I guess, and we got tired of having to fly off. So we kind of started our own thing, led by Adam, and we are basically brokers. We work as a correspondent lender and broker. A broker has been in business since 2007, and in total we've got roughly 31 officers, 3 processors, and we have an option for any house underwriting.
Yeah, I think one of the things to kind of keep in mind with us being a broker, right? A lot of mortgage companies, the way that they and this is kind of behind the current, but we're all about transparency and being candid. So the way that they make money, right, for other mortgage companies, they essentially build additional costs into the rates that are being charged to your company, right? So as brokers, there's a cap of how much can be charged from a margin perspective. So we're, all of these big box lenders and big banks, they kind of inflate those numbers. We don't have to do that, right? There's not a bunch of layers of middleman and things like that we have to pay for. And ultimately, when rates almost hit 8% last year, that's a big deal, right? Where some mortgage companies are at 8%, and then you see companies like us at 7.5%. That's right. Is there's not a bunch of layers of additional costs.
There's essentially no overhead with us. We pretty much all either operate out of our homes, like a lot of you guys probably do. And if we do have an office, it's typically a part of our office. So yeah, we were able to basically keep our margins super thin for rates to apply.
So the 3 things that I want to just we'll talk about first are the pitfalls of the process, right? And this is interactive, so feel free to ask questions. We're, at the end of the day, we're here to be a resource like Nika shared and Michael. It's imperative to have a team, right? We're not expected to know everything about real estate or about title, insurance. We have our that we trust, right? We've been working with to be able to do that. So this is just one of those times when you can add a really good layer of support on the lending side, right? You probably have something you work with. We don't want to step on those toes, we just want an opportunity to kind of add benefit to that. So the 3 things that we're going to talk about from a pitfall perspective is the lack of ability, right? So you get a home under contract. Your buyer's been talking to a lender and it's been great up front. You get the contract and then what happens? Sometimes, not all the time, right? What happens sometimes? Yeah, it's Sunday afternoon. Your buyer has a question, there's issues with insurance, and you can't get a hold of that, right? So that's one of the things that we see time and time again. It's really difficult, and I know sometimes you have customers that they just want to use something, right? They bank here, or they friend of a friend told them that you need to talk to so and so, so they want to do that, right? And that's just part of the process. But at the end of the day, it is a major pitfall that we see oftentimes when the buyer, right, or even you as the real estate agent is trying to get a hold of the lender.
Well, and added to that too, a lot of times you may have questions about the process, and some larger lenders, they won't talk, right? That's not how we operate. So we don't have pretty,
Yeah, and it's one thing we talk to the customers about up front, right? Up front, we're gonna say, hey, we're not gonna share any of your personal information, right? But we will keep your real estate agent, or you can call a company, we'll keep insurance. The seller, we're looking to keep everyone in the loop as we maneuver through the process. Right, so that's one of the things that you want to make sure whoever you work with will communicate with you all the time, monthly policy. All right. The next one is, it kind of goes right along that same thing, is communication, right? You probably all had, an issue on an appraisal that's come in, with lender required repairs. Right, and you can't get that lender to call you back, where it's a credit union, they almost speak to the customer, your customer's super busy, so they can't, maybe schedule time to have a conversation. So again, if there's insurance issues, I think the things that we see, quite often is if they're not working with one of our partners, right, that knows they got insurance on a home and it doesn't have that coverage. Right, it doesn't meet the requirements. And that, from an approval perspective, that has to be, it's a major item, like if you're buying a home, you have a mortgage, you have to have insurance to cover that. So that's a major item that can be a sticking point for that loan getting fully approved and off. Okay, and the, one of the other pitfalls of one thing is it a consistent process, right? So if you've done real estate for even 1 or 2 years, you may feel like, hey, whenever I send a customer, I get a different experience, right? Or it goes somewhere that you're having to follow up, you're having to do all these things to kind of stay on top.
Yeah, and basically with our team, we Whitney, she's our loan officer, and processor. We don't sort out any of that, so there's never anybody touching the file other than Chris, myself. Or us have to get thrown around 5 different people. Part of that because everything we have is very streamlined. Less hands in the pot.
Yeah, and ultimately, we have the ability to do loans in other states, but our group is not in Florida or California or Chicago, right? We are here locally. So from a time zone perspective, we're all, I think we're all, we were talking about something this morning, like 6:30 in the morning, and we're going back to Portland now, right? Where it was 9 o'clock at night, it's one of those things where, the time zone issue going with, because we're all local, right? And then you are doing business here locally, maybe it's Oklahoma a little bit, right? As the Metroplex kind of, pushes a little bit north, but yeah, ultimately that's the other big thing is that we're all here, Central Standard Time. So there's no issues of like, okay, so we got home for the day, or the event started.
Yeah, there's no office. I was in Costa Rica 2 weeks ago. We don't have office.
Some of the other, we don't have to kind of go through all this, all in all, but again, we talked about between Aaron and myself, we've got well over 30 years of knowledge and experience, from a consumer perspective, a customer perspective, the ease of being able to go online, fill out an application, I think it takes 10 or 15 minutes, even for not super tech savvy people, right? We've had customers that will be online, 15 minutes, 20 minutes.
And as far as the applications, we can go around, so if you want to have something that looks like it's represented by you as well, we have the option to put your logo, put your information on there, we can go around online application.
Yes. Yeah, and again, that's, just like DK just mentioned that part where you're, again, at the end of the day, we're partners, right? And that's the reality of how this business works. So we have the ability to be able to send out a specific link for you and your clients. They'll have us as the lender, and then we'll have you as the real estate partner. Again, communication. Aaron mentioned it, but we're not endowed with somebody who's Friday 8 to 5. That just doesn't. There's a lot of people are. That's not how. That's not how I'm able to kind of get to be my business. I think it's just not part of the business. Right? A lot of times they go see homes after 5, so you're making offers after 5 hours a week or on the weekends. Or if they're working Monday to Friday, then you have to be available. And we'll get that's part of who we are as well. From a speed and efficiency perspective, our goal in general, of course, is to have your buyer's group close in 15 days. But there have been the times we actually just had a veteran borrower that closed in 12 days. And VA sometimes there's a little bit of a challenge. We got very ready to get them like that.
Well, a lot of times too, what I've seen is, I've got a particular agent that I've been dealing with for, 2 years. I'm not a primary, officer. She'll always call me when the loan by the other company can't get done. And we're, that a lot of times we can potentially use the appraisals, that the other, if the lender's willing to work with us to provide us all the documentation that we need. We can get loans closed in as fast as 8 days. That's legally, as fast as we can legally close. Has to be a minimum of 8 days. We can easily do that. Typically, especially in this market, by the time we get loans disclosed, it's usually day one, which we get the contract, and we usually have an additional 48 hours and can easily get it closed. If we need to, absolutely, yes.
Yeah, there's the ability to be able to do a fast track. If you had a contract that fell through and needed to close quickly to still stay on the close date, right? Yes, question.
Land loans,
Yeah.
it's a big one.
We have a broker outlet. Land is getting more and more difficult. So yes, there's an outlet. We have multiple.
We do have options for construction, so we can do a one-time construction to close. As far as actually being the land, we would refer that out, and then when they're ready to build on it, we have resources that we first are not in that space yet.
Yeah, and it is one of those things where it's getting, there's a ton of it happening right now. And so one thing that isn't a renewable energy source is it being maybe more of is right? So I do see, a ton of opportunity there. It's just a little bit, I think from a bank perspective, from a mortgage perspective, there's a lot more risk, right?
Well, there's that, and it's just a completely different type of asset, so it wouldn't be considered real estate, it's nothing on property. So it's part of secondary mortgage perspective, when we go sell the loans, money back, it's just a completely different investment profile.
Yeah, I mean, there's no secondary market, right? There's no Fannie, there's no Freddie, no Ginnie for government.
The lenders are essentially.
No, that's different. Banks and loans.
Oh, yeah,
They're not doing, lands. Yeah, and that's.
I wouldn't know that something.
Yeah, there's very few, like in the area, there's very few lenders that do land loans. A majority of them are again more risk averse than other mortgage companies, right? So it's going to be like the one good thing, right, is local banks will look at a balance sheet versus like tax returns necessarily, right? So they're not necessarily looking at tax returns. It's going to be more of a balance sheet. So as long as there's obviously revenue coming in and it's positive, then they're probably a little bit more open to that. At the end of the day, the banks that I use here locally are now requiring 30 to 40% down. So it's not like, I remember 5-10 years ago, you could like 10% down, right? So now it's 30 to 40%, and then it's on a short-term adjustable, right? So it's on a 3 or 5 year arm, and they're gonna require you to build in 2 to 3 years. So it's one of those things where it's getting, again, there's very few like banks that offer them. And again, there's a broker out. We do have a broker outlet for it. It's just not super bad. Okay. Any other questions? The other thing that we have, right, in that sometimes as you're navigating the process, you send a link to a mortgage company, and hey, for whatever reason, they're not ready to go. Right? They have credit they need to work on, or they're building up funds for down payment, whatever it is. 6 months go by, 8 months go by, and you're on Facebook and you're on the internet. That customer line closed, and you see somebody else's face, right? Our process is they go into our CRM and they're linked to you as real estate agents, right? So anytime they're calling us up, either pre-approval letters or to start the process back up or what have you, those leads, right? Those referrals are coming back to you. So that's that we've been able to been able to do for a really long time. Partnership. And then the last. You know, which we kind of talked about, but
Oh, yeah, so that kind of segues, I think, into our next slide, as far as just options, like I said, we are a correspondent lender, and what that basically means is, we correspond with other lenders or investors, if you will, so we can basically pick and choose from different institutions that we can provide a loan with, so we're not just, one of the big things that realtors will have, you guys are going in-house underwriting, we do. But a lot of times when you have your own in-house underwriting, you are very limited to the options that you have. You can't go out and branch out and see if there might be other companies that are pricing you, they've got one of the guidelines, so we do have the option to have a wide variety. And it goes into how we operate, you know, the same with multiple investors, we have progressive pricing with. All our process, like I said, is done in-house. So Whitney handles all of our processing. She's been working with me for several years now. Just got great to say about her. Underwriting, again, we have an in-house underwriting that's going to get back down to delegated. It's a non-delegated, it basically means that we send our loans out for underwriting to whoever the investor is that's going to end up purchasing that loan from us at closing.
and that's the big thing, that's right. Really, all of the what's classified as a non-QM loan, a non-qualified mortgage, right? So there's two different types of loans. You have a QM loan, which is typically your Fannie Freddie, conventional loans, FHA, USDA, VA, all of that is QM, right? And then you have non-QM, which is everything else, right? So typically, non-QM are they're a shorter term, right? So like if you have a 12-month loan or a 6-month loan, those are all non-QM, so it's a different animal, right? We got not just we do the thought and okay.
Well, so the thing is that when we have our outside underwrite, a lot of people, they kind of, you know, "Oh, I don't want that, you know, I want to make sure that you guys have your relationship. We basically get set up with the same underwriters at each of the different investors. If we have a bad experience with an underwriter, we reach out to our peers at that company, which is the county executive. We don't want that underwriter. And they make sure we actually do quite a lot of business. We've got pretty good status with most of our investors, and so we do work typically with the same few, if not the same underwriter at each of those. We do have a good work with them, even though they're not necessarily.
Just real quick, before you go, does anybody know why that's important to have? So again, not to knock anybody or anything like that, but a Bank of America, right, or a Chase, they have one investor, right, themselves, right, as a bank. But does anybody know why it's important to have different investors? And that's okay, yeah.
Well, that's the next one. If mom says no, you go ask dad instead. So if we have a decline at one investor, they say, "Oh, sorry, we've got an overlay for that." Typically, that's very rare, but some investors may have guideline overlays. We can take the loan. Hopefully, rates are still, you know, good because the locks are going to be different between each lender. We can go to another lender. We can still get it done. And again, because we can close so quickly, we can typically, you know, halfway through the process, we only have 2 weeks left. Still not a problem. So. If for some reason, typically we don't run into that issue because we've been working with these lenders long enough to know like what their guidelines are going to state. That if for some reason something pops up, they don't like an issue with a pay stub or they don't like a item on bank statement, they're not willing to budge on it. We can say, okay, I think your time is just somewhere else. We can still get the loan done because again, we have multiple investors. Second one, a lot of people they'd rather have us deal with in-house. We do have an in-house underwriter that we delegated. We are delegated to underwrite on behalf of those companies. So we still would be using those different companies, but we have our own underwriter who has the authority to underwrite on behalf of them. A lot of times that's good because everything is in-house, we can get it done sometimes even faster. So a lot of times we have everything in from the client, or everything disclosed, we can get an approval on the same day that we send it to the underwriter. So if for some reason we really need to get something done quick, we can send it to our in-house guy. And we also have a very good relationship. And then the last option that we have would be brokered. So brokered deals, we are actually just the We're just facilitating the transaction. All FHA loans, just because of the sheer size of the volume we have to do with FHA, requires for us to broker those loans. So with FHA, we don't have as much flexibility. The good news is FHA is typically fairly lenient as far as the program is concerned, and we do have a handful of lenders that we work with for FHA. But we don't actually fund those loans. So correspondent loans, we actually fund those loans ourselves. We're in control of the wire that go out. That's all in-house. So if there's an issue with something with the a last second item that title's having to get here, or maybe the lender's having to correct something, we need to get that wire to title. Our broker has the authority to go ahead and send that wire. We don't have to wait for another company to get their control.
Yeah, when I see that a lot of new construction, right, especially right now, there's something that is not critical, but it didn't get done. Landscaping,
Yeah, the refrigerator.
sorry, yes, whatever things, right, that could delay closing normally with a lender, we have the ability to still go in and fund those, knowing that hey, they're gonna get it. They're gonna get it. Microwave.
Or at least the wire can go out, and then the title company has it, so that way, as soon as that item is checked off, we can set the funding conversations. We already control that. Broker deals, we're at the ratio. Probably do me. That's all pretty much.
All right, now so real quick, any questions before we move into just the basic programs?
Do you all have banking loans?
We do,
We do.
yeah, so those are also broker.
Do you accept loans for properties outside of the US?
I'm not, Puerto Rico, maybe?
We may have invested that.
Yeah, I don't know, but outside, yeah, most of your mortgage companies in the US, all in the US. And so in 21 years, I've been at 5 mortgage companies, none of them went outside the US. And then here recently, like Puerto Rico has been one of the ones that to be able to finance it, but yeah, there's not as far as I know, that'll be maybe like a mutual fund where they have US money and they're just, just property and then money get out that way. But no, typically US banks are not lending outside the US. But yes, we do have a broker out of that. Yeah, I'm Hollywood. I know you know not fluent in English and Spanish, so if there's ever any. There was like first in Spanish. I know I actually just met with one yesterday and they speak great English. They just heard it in Spanish, right? For Spanish. So we have so I'm able to speak Spanish as well. So what programs do we got? Aaron?
Yeah, so just again, all your basic stuff, conventional FHA, VA, USDA, non-QM, which is going to be, again, bank statement loans, CPA letter loans, we'll get into that as well. And then we do have a cash program, and we also have hard money lending options available. Those are kind of just more of resources that we know of, or have relationships with. The cash program is actually the site. Adam, our owner, he has a site that we allow we do that. So,
First up, conventional ones.
got it? So yeah, conventional ones, again, 5% is to be minimum down. A lot of you guys can know all this already. First time home buyers can do as little as 3% down. Sometimes there may be income qualifications though, depending on the county, so you always have to go in and verify that they're not exceeding the income. Minimum FICO scores are going to be 620. However, conventional loans typically make more sense when the client has credit score up in the 7. So they can still do one in the 6. It just usually doesn't make as much sense because of the private mortgage insurance rates they're going to be receiving, as well as so conventional loans are very sensitive to FICO score, and so is PMI. Maximum DTI, we don't, a lot of banks are going to have lower restrictions. You go with whatever bank says at the time, which is right now, we think with 50. And of course, we've got PMI that's required anything less down. We do have lender pay PMI options. So a lot of times we'll hear, oh, this lender over here is offering, 10% down with no mortgage tax. There's still mortgage insurance, it's just built into the rate. And so the lender pays it on behalf of the client. So it looks like the client doesn't have mortgage insurance, They do, the downside of that is because it's built into the rate, they can never remove it. They have to. Again, we don't have any guideline overlays, some of our investors might, but as far as we don't, we go straight to what Fannie Mae says. And again, in those few situations that we've run into where there might be an issue with the investor having no overlay, we typically have run into that previously, so we know ahead of time, once we've screened all the documents, yeah, that's probably not a good idea to sit there. Yeah, typically, if Fannie Mae allows it, we can get it done. And then of course, a lot of times right now, you've got people that are, not wanting to pay closing costs, so we do, all this program does allow for solar concessions. It does depend on the down payment. They're allowed to receive solar concessions, a case by case, and again, it's just typically something that we use for local. So.
Yeah, and it is important to know, right? It's not, ultimately, it's not your area of expertise, but it is important to know that, there are limits. And so oftentimes if you hear, builders say, hey, we're giving $1 million if you buy this house in closing costs. Well, the reality is they're probably not gonna use that, right? So oftentimes, if it's, and I've always said, it sounds like it's too good to be true, it sounds too good to be true. In most cases, it is, right? Because at the end of the day, these are the programs that's out there, that are available and that are out there right now. There's very few, there are variances, but there's very few variances. And oftentimes, once we start having conversations like, hey, I talked to the mortgage company and they said there's nothing in mind. Well, let's go and get an estimate and see what that looks like, right? And then as we start to go through it, line by line, well, hey, there's actually a cost for the term up front, so that's how you don't see it on a monthly basis, but it's still there, right? And again, at the end of the day, that's not how we operate. We operate on transparency, so we're gonna say, hey, there's lump. You can either pay it per month, or you can pay a lump sum up front, right? So, and ultimately, the customer gets to pick which way to go. Jumbo financing is still out there and available. Minimum 10% down, right? If you didn't know. Credit score requirements are higher for jumbo, right? So like on a conforming balance, which is anything right now below 715 or below is considered conforming. That's the conforming limit as of right now. So if you're at 715 or below, the credit score requirements are lower, and then ultimately the reserve requirements are either lower or non-existent residences. Jumbo, on the other hand, has higher, just has a higher requirement, right? Higher credit score, lower debt to income, more cash at the end of the day is what they're looking for. So the big things is there, in some cases, there are times where there's no PMI on jumbo loans, even with 10% down or 15% down. So that is one of the variances where there truly is no PMI. They just kind of have it built into the loan. And then the max on those is 2 months. So that would be the highest you can go on a traditional jumbo. Next slide. FHA.
Your favorite. So FHA, it's actually a lot of times realtors, and I don't know if you guys. They're not always. I think the biggest thing with FHA loans is people are worried about the appraisal a little bit more picky, more guideline. More things that but they are good options. Not everybody that goes has 585. That is minimum. I have personally funded FHA loans well below that 540, 555. When COVID hit, that became in the past. Most FHA lenders, most lenders in general, increased their score to 4660. They have slowly been coming down. I believe 580 is going to be the lowest that we offer, but we are starting to see more and more lenders kind of open up those expanded guidelines. DTI requirements are going to be a lot higher. I guess more lenient, so we can go up to 57 or 52.99. Sometimes they're going to be compensating factors we have to have, so maybe they've got some reserves, or let's say again, maybe they have an 800 or but they are a one-income household, or they just don't make a ton of money, and they've got a high DTI. So again, credit's still good, but their DPI exceeds what the official will allow. We'll put them in an FHA loan and that'll allow them to go up to, 57% off. All loans with FHA, regardless of the down payment, because again, sometimes people will come to us with 20% down, they still have a high DTI, they're gonna have mortgage. And FHA has a fixed mortgage insurance amount, it is not, dependent on FICO. If you put 10% down or more, it changes by, 0.5 of a point, so it's really negligible, but basically just know that, the client's going to have mortgage insurance, if they have an FHA. Again, it does allow for some concession, the FHA right now is at 6%. So your client can ask for 6% back from the seller. Oftentimes, I'm sure you guys know how to do that. 6% higher on the price, hopefully it appraises for that. And seller give those costs back, give those fees back to the client.
Yeah, we're seeing that help a lot. I know with the two my, it's a huge program that a lot of people are doing. And if it's funded by the seller, that is factored into that 6%. There's a lot more room there from a cost perspective, and that money can be allocated. So it has to be allocated separately. It can be used for the 2-1 buyout. Is there everyone pretty clear what that does, how it works? So it's a 2-1 buy down. Let's just say the starting rate's 6.25% today, right? So if your customers on a mortgage 6.25%, it's a seller funded program, it's a temporary buyout. The first year it buys their rate down and their payment is now based on a 4.25% interest rate, right? It is massive. I sent out 2 scenarios yesterday where on like a $350,000 purchase, and that's a $400 savings a month the first year, right? And the whole reason that this is I don't know, a really good option right now when we're talking about it is we fully expect within the next year or so for rates to come back down into probably the 5% range, right? So if they are starting at 6.25% and you can get them down to a payment of 4.25%, that following year would go up to 5.25%. Well, the hope is that they're refinancing within that period of time and locking in their rate at a 5 or 5.25%, or if it good things really happen, then we do get into the 4 area that lock it in. And that is seller funded. So that's from a cost perspective, it doesn't cost your customer anything out of pocket, right? It's paid by the seller.
And it's a good way to get the buyers out of the woodwork that are really rate sensitive, and also right now, this is all like, but I feel like house also a little bit longer, so it kind of encourages sellers to maybe give up a little bit, to get that house on more.
Everyone who was here last week saw, right? We saw the stats and how much longer. And so what's it cost? It's different based on, it's essentially based on the loan. It's different. It's a percentage.
Yeah, so it's a simple calculation, right? So you would take the delta between, let's say 6%. So we would look at the interest for the first year at 6%. And then the difference between 4%, okay, and we've got a simple calculator that it's Excel spreadsheet if you want it, I can move down to it really simple. That'll be the difference for that first year, the seller pays that, and then the second year we look at the difference between 6% and 5%, or whatever the rate may be, right? 7, whatever. They pay that exact amount. And so what's actually happening is that those funds are held in escrow by the lender. And so the lender basically is still charging the client 6%, but they're pulling the difference from the escrow that they're holding to make up for that. So the note still stays 6%, all the documents still say 6%, nothing is going to show. There's an agreement, there's a 2-1 buy down agreement requires closing disclosure, the note, all the things that have that information on it. It will show the locked interest. A lot of clients are thinking, well, what if I want to refi within the 12 months or the 24 months? The escrow account will actually get applied to the pay. So that's another benefit for them. They don't lose that money if they decide to refi and rates drop. They still get to take advantage of the money that the seller paid.
Yeah, we just closed one. I think it's like 500,000 purchase, right? And the cost was like 10,000 or 12,000. Is what the different seller. Yeah, that's what the seller. So
And what rate do they qualify at?
They qualify at the lock rate, yeah, exactly. So you have to qualify at the current rate, just like if we would like a custom bridge, something like that, they still have to qualify at that, but is again. From our perspective, that's their issue. And the sellers just basically.
So a seller, house is 25, they wanna offer to buy it down. What's the cost of the seller in that?
Well, again, I have to get the calculator out, but essentially, let's just say it was in grand. So it would depend on what the rate is, what the loan is. So if they're going 25% down, it's gonna cost the seller more because the loan cost is higher than you.
Oh, I can use seller, that they just offer them.
So if you have a client that's interested in it, that's when we would send you the calculator. And we would say, this is where they're at, this is how much it's gonna cost based on what your client's going to do. It's what we're offering, but you would know that going.
That's.
That would be something that.
You can. Right, so if it's conventional, you're gonna set it up with, let's just say 5% down. So if you have a buyer at a minimum of 5% down, this is the most that it's gonna cost you based on this price.
And I can email you, the calculator is as simple as typing in an interest rate, typing in a loan. It's like, it's just $4. So if you want that, I can send that to you.
Can you send that to us? Can you send that to maybe everybody?
Yeah, send that out there. Yeah, whoever signed up, we can send it out.
Send it to me,
Yeah.
Yeah, it's so simple.
The best thing to do would be worst case scenario, like if you're trying to submit a seller, hey, you've already been on the market 35 days. We already know that we need to either do a price adjustment or offer some kind of a benefit to get a buyer out. And we can send you worst case scenario. They only do 5%. This is the most.
So basically, you figure out the payment amount at 6% and the payment amount at 4.5%. You take the difference by 5.
That's calculator.
Yeah.
Plug and play, change the phone house, all that stuff.
Yeah.
That's actually a solar's cost, so it might be even less.
Yes, we are not CPA, yeah, that's a good thing to look up.
But they, but that's definitely to do solar. So we can talk to
Well, and we also still may be, and again, this is more of you guys' expertise than mine, but we still may be in a market to where we have comps that are still high from when the market was on fire. And so we can still potentially get an appraisal at $7,500 over asking because the comps are there. And so that's something that you could also come in and say, hey, the house is listed at 395, we're willing to be 400 because we really feel like we'll appraise at 400. Now you can run a risk there because it's not. But that is a way that you can try to entice them to give that split costs. That's $5,000 extra on the price of a home. We finance it is never.
Yeah. So, yeah, I mean, every $10,000, I think it's $50 or $60 a month difference, right? So 5. Yeah. It's not,
Okay, so VA loans. I'm a vet myself, so I'm pretty familiar with these loans. I've got a VA loan on my property. It's a fantastic loan. It is another loan that a lot of times realtors may scoff at.
yeah, it's a bad.
So as a vet, don't do that. Because it really does help out a lot. So there's no down payment required, minimum FICO scores. We can go down to 580. Some lenders are a little higher than that. That's an income ratio. There's not really a set max. VA loans are great because it's much more of a subjective underwrite than an objective underwrite. So the underwriter can make a lot of calls in gray areas, whereas with conventional, there are set guidelines. You have this and box where it does. With the VA underwriters are really allowed to kind of take a larger look at the overall profile and say, okay, well, we think allow us to slide. Again, DTI, I have funded, loans with VA up to 5%. Um,
72 with max. Now, again, so there's a caveat there, right? The wife is working, we couldn't use her independent credit score. And those are really the only times that, and going back to another issue too, is, guys, we're gonna lend responsibly, right? We're not gonna put you buyers, in a bad spot, because at the end of the day, that affects whether or not they come back to you as well, right?
Well, and we also don't want to have, foreclosure because that, yeah, we do live responsibly, but just, there is not necessarily a maximum that they may or may not fall. So, again, we just went through our measurements, we get green light, good to go. No mortgage insurance is required, there's no maximum loan amount. So there used to be a max on VA loans, there is no longer a max, and there is no longer a down payment requirement. So you could, if you qualify, get $1 million VA loan with nothing's out. That's typically rare. I've seen them up to probably in the 700s, but I've never seen them go done. But it absolutely can be done. It does go up into higher price or higher loan balance loans, so the qualification can be a little bit more commitment, and they may have a little bit higher pricing, but no loan amount that's case. And they do allow again 4% VA worth of possessions. And this is a big one. Veterans only. Now, if they're married, spouse can be on the loan. If they're not married, technically there's what's called a joint VA loan. They are extremely difficult to get done. They typically never make sense for the client because basically the VA is only going to ensure a guarantee of the veteran's portion of the ownership of the property. So therefore, there's a down payment for it. Typically, the down payment is not 25%. Well, it's 4.5% of the guarantee. So either way, we had to go to the calculation. It almost never makes sense. They're very difficult to do, and by the time we're looking at going that route, it usually makes more sense to look at it in FHA with non-borrowing or non-purchasing co-borrower or even borrowing. So, and I don't even know that we have an investor that offers them because they are very difficult to get done. So typically, VA, down area, or better.
And there's two programs, right? And if it's 1 o'clock, you guys are going to problem at all. So 100% financing is only allowed for VA and USDA, right? Anything outside of that, there's either some kind of assistance or something like that. But it's obviously it's important to understand if you hear like, hey, Bank of Montana is doing 100% financing on an FHA loan, that's probably not accurate, right? So, so USDA is another option that's flexible from a down payment perspective. So 0 down, it is restricted to rural areas, right? So you can't get a USDA loan here in Prosper. There are parts outside of Prosper, surprisingly enough, that are still eligible. So yeah, typically Salina, right, Van Alstyne, Anna, those are the kind of surrounding areas. But it's still a great option. So if you have a buyer that doesn't have a whole lot of cash for both down payment and closing costs, this can still get the menus with minimal out of pocket. Farmersville's helpful. Yeah, Princeton, Farmersville, Anna, a lot of surrounding.
Yeah, I mean, the map is, if you just Google USDA map, I mean, it's not proprietary information that people publish out there. You basically looking at the same information.
The same information as us.
So if you did want to know if the property was available, you could easily find that out, or you could have customers find out.
Yeah, oftentimes it's probably the most competitive with FHA. The monthly rates that you pay in mortgage insurance on, or the guarantee amount that's paid for USDA is less than an FHA loan, right? So from a payment perspective, if someone's putting down 3.5% FHA, they're doing 100% financing on USDA because the difference in mortgage insurance, or the mortgage insurance premium on FHA is 0.85. It's like 0.35 on USDA, so the payments are similar, right? So if we're looking at they're short funds, but they're in one of these eligible areas, that could be a reliable option.
Yeah, one thing too that I didn't put on here, just to know for USDA, if it is something that you're wanting to look at for this one, closing those fast is a little bit more challenging. Not because we can't get it done quickly, but because with USDA, once we have everything underwritten and we have it cleared to close, we then have to send that loan to USDA, and then we're at the mercy of their final underwriting, because they want to make sure that go, and so that process, it could take days.
Always fun.
Yeah, it could take 2 days, it could take 10 days.
The good news though is they can tell us like, hey, we're working on submissions from January 17th, right? So we know approximately how many days it's gonna take to get the loan out from.
And we're not looking at 45-day closes, 60-day closes. I mean, there's not really a program out there that we can get out there. So if you're ever thinking, okay, we're already going to extend this, most likely, unless we're in another refi boom, which.
So who can apply from USDA? Anybody can apply from USDA.
There are income limitations.
Yeah, there's income limitations, you can't have it on a mortgage, right? So typically it's for first time home buyers. But if you're a repeat buyer, you can be eligible for USDA as long as you don't have another mortgage. So that is one of the steep requirements of USDA. It's very, like, yeah, essentially you can't have another mortgage.
Yeah, and then in VA, FHA, primary residence.
Yes, it's not for investment.
So non-QM, so right now, we're kind of having to scrape the bottom of the barrel a lot of times. The business, we down the rates. So, bank statement loans. We've got 12-month bank statement loans, we've got 24-month bank statement loans. Essentially, if you've got a self-employed client that writes everything off, which.
Post COVID, this is massive. Right?
Yeah.
We have several buyers right now that are.
Yeah, we absolutely can look at bank statement loans, CPA loans. This is actually a local program. I had a client, they were YouTubers, they were revenue about $4 million a year. And they wanted to purchase a house. They had nothing on the tax. Everything was written off. And we were basically able to get them qualified with the CPA, basically saying, hey, the revenues are X amount of dollars, and we can use automatically 50% of whatever the CPA states that their revenues are. We're not looking at tax returns. We're not looking, we're basically just going straight off of what the CPA is going to say. So if they're going to say they make X amount of dollars, we use a ratio of 50%. There can be exceptions if the CPA identifies that their expense ratio shouldn't be 50%, it should be more. Underwriting can take that into consideration. But that is a cool program that we have that we can offer. DSCR loans. So we actually just closed the DSCR loan recently. Because with this, with a lot of people that want to buy investment properties, they may have their income spread pretty thin.
Yeah,
They may be.
tax returns is typically the issue with.
Yeah.
A lot of, sometimes with investors, right, there's more expenses, right? So rightfully so, they have the ability to write off expenses, and sometimes those expenses offset 2 months of the income, right? So if that's the case, so that's the DSCR it's a debt service, right? So the ability to qualify is based on the mortgage payment being less than what the market is saying that home can rent for. So we had an investor in California. She's a public speaker, right? The last couple of years in California have been brutal for public speakers, service industry, right? For a lot of people in that area, she had cash. So she was able to still purchase based on the fact that the mortgage payment was less than the rent, and she was able to put 20% down. So it's as easy as that. We're not looking at tax returns, bank statements, essentially looking at for assets, and quite simply, the home has to rent for more than the mortgage payment.
Yeah, and we're not looking at the standard line items that we'd be looking at as far as assets. There's deposits here, they're not sourcing all that stuff. It's basically, do you have the money? And does the rent payment cover the mortgage? Basically order a form. Also non-human we can do for recent adverse credit, so foreclosure bankruptcy. I've done a couple where rates aren't going to be the best, but when you have somebody that's wanting to get to a home, or for whatever reason they need to buy a house right now, we do have options for somebody that's just been out of a bankruptcy for 8 months, or maybe there's a 4-year requirement and they want it out for 2 months. I'm sorry, we have options for that as well. And again, it's good for self-employed and investors. And then some of these are privately held, a lot of times we call these portfolio loans. These are all brokered. And basically, the investors that we send them to are gonna look at these loans on a case by case. So they can be more flexible. If it makes sense, even though it may not be their standard guidelines, a lot of times they might be.
Yeah, the great thing about these, they're all under, like the majority part of the laws. So we'll send the bank statements to the investor, they'll underwrite it, they'll say, hey, this is the income that we're using. So essentially, that's what we're going off of, and I have not had one where the income that they come up with changes. We've actually, in some cases, been able to use more of the, percentage? What's that percentage? Anyway, on bank statement loans, if they're expensive, if their expense ratio is actually less, then they can end up using more, and that was the case. But these are all, guys, these are all loans that you definitely want to have. You know, whoever's gonna finance it, they want to look at it up front. These aren't just those who want to send out Next.
Okay, yeah, so cash program, this is the state of a company that our owner now, we're gonna set up aside. We noticed that, 2022, well, 2021, I guess, when we have, offers of 75,000 over actually, right? I mean, it was just crazy. So Adam was like, okay, well, let's put together a cash program to where we can go in and offer a cash offer. It's much stronger than financing. We basically buy that loan on behalf of the client. Buy the home, I'm sorry, on behalf of the client. We can do an assignment of contract. So let me give you an example. I had one where the client, it was a contingent offer. He was moving from Arizona, and I think it was Open Door, Redfin, or somebody who was buying us. They backed out for whatever reason, and he was left with 2 weeks to get his house sold, and it's a contingent offer. You don't want to lose the house. So what we ended up doing was assigning the contract to Grayson Real Estate, which is the cash program. We bought the house on his behalf, and that gave him time to get his house back on the market, to get that house sold, and then essentially it's a lease back, right? So we become the landlord. We charge there are fees that we charge, oftentimes dependent on the risk that we look at. And then basically the client just pays a per diem of the guy based on what they would be qualifying for on the loan that we're providing. So we still have an underwriting process in place with our investors while Grayson is purchasing properties. They can be locked in already, and then as soon as they have the funds from the sale of their current house, then we basically do a secondary closing. We do require that the title company that handles the DR title.
Yeah, the other thing is, and I have it right now, we're making offers. Oddly enough, right in this market, there's still multiple offers, which is just crazy. But there are some that are still really nice, and they're getting multiple offers. With our cash program, it says 2-week closing and no financing. Right, so it's awesome.
It's available for
It is not available. Yeah, so essentially so that's not QF, right? It's only going to be for QF products, so conventional FHA, USDAs, but mainly conventional. Right? It's because again, we want to make sure that there's that they have an equity position in the event that things go sideways. Right? The last thing that we want to do is have to foreclose. Right, so it's going to be, they have to have, not that we're going to require reserves, but they have to have some reserves, and then typically they're doing conventional finance.
And then lastly, hard money. So, it may not be something that people use much, but
Some of the houses that I've seen right now on the market, guys, are rough, right? So that's where you're telling your hard money is.
So if you are into, property flips or, rehabs, we do have, outside resources that are available. They're not going to be necessarily related to CapRock, but we do have good relationships with people. Some of them are related to CapRock, but anyways, if you do come across a situation where you need a hard money financing, We typically can offer, or at least get you set up with somebody who's offering, more favorable terms than a lot of the bigger lenders that are out
Yeah, most bridge loans that are out there, right, the costs are 3 to 4% is what the buyers are gonna pay. And our cash program, I think on average is around 2 to 3, right? So there's a benefit for your buyers to be able to use our program, because at the end of it, it's gonna cost them less. And we can probably get it done quicker than any of the bridge loan out
Are they short term?
there. Typically, I mean, again, it's gonna vary between, case by case, right? So, I would say that the majority of the first time where somebody's wanting to come to somebody and ask for the hard money, they're probably gonna want to do 6 months. If it is a repeat client, it's an investor that's wanting to continue to utilize the services. I've seen them go out to 18, 24 months. I've seen people come in with hard money to try to, it's called buy and build, but buy a house on behalf of somebody who may be about to, foreclose. So there's a lot of options out there. So we do have resources where there is cash available, if it makes sense. There's not really it's an individual's money, right? It's not an institution. It's gonna be that person that decides based on the credit profile, based on, whatever assets they may have, the experience that they have. So it'll vary.
there. Yeah, and at the end of the day, right, it's options. It's options for you, real estate, it's options for buyers, for your investors, just knowing that you have an outlet, right? So that's the biggest thing, but I don't know. Any questions on the way? If not, Michael, you're back. Yeah, here's our contact information. You want to take a picture of it?
Yeah, and I did not prepare it. I only brought 4 cards, so one card, take a picture, no picture. Yeah, this.
Go ahead. Yes. Yeah, so specifically students.
No, I have a client who's been emailing me.
Okay.
They have to do. Now waiting for 2022 to be done, and so the total will be like 15 months worth of time. And we here for 3 years. If you can do.
So do they have previous work history from the country they came from?
Yes.
So we can, it's been a while, but I have done, as long as it's in a similar field, we can look at previous work history. From the previous country. So we would still have to get the income documentation, whatever forms that they issue in that country. Show that they made the income there and that they had an employment history there. For instance, I had a guy who's a glass worker, he lived in Ireland. He got married to an American citizen, moved over here, started working for a glass company. He'd only been working there for 6 months, and we had to go and get all the employment documentation from Ireland to show that, yes, in fact, he did have that work.
Yeah, yeah, and with 4 months.
So
Can't come off of that, but I have to. We were like 4 months short, of the time when we approved that we were working months. So now it's done. But this one is that we only get cash. And they only pay them, and the tax input that I have, so they're getting the way of forming the property tax.
is he a permanent resident or? Okay, so, I mean, again, we would have to approach the investor, but there is a 12-month bank. So we could look at just 12 months. And again, they don't care what, right? They're just looking at, I mean, if you get a return from Macy's, I mean, they're gonna include that in with. I mean, any deposits that go into your account, they just total them all, they don't even look at. This is the incoming transaction, they total them all up, and they go from there, so. Yeah, it's just exactly. It doesn't necessarily, on the banking programs, they're not basically saying, are these transactions from their business? They're just saying, this is money income to the account. Yeah, that's possible.
Yeah. Yeah, and at the end of the day, for the non-QM type stuff, right? The more money you have as far as like down payment and stuff like that, they're more open and flexible to those, more out of those. 5 to 40%. Yeah, but so even, so I've had conventional options where we've been able to get exception to 12 months. So again, it's worth looking at. And that's one of the benefits of having several different investors, right? 'Cause again, one of them says, well, we want to have.
Are they self-employed or are they W2 now? And they've been W2 for 15 months?
Yes.
I think there's a case that makes that. I mean, if that's something that you want us to look into, we could definitely contact that. Please get their information and then, you know, go talk to some underwriters and see. And it's another good thing with us having, like I said, if mom says no advice to dad, we have the ability to go and talk to several different investors and ask them what the requirements would be. Because a lot of them may view the guidelines differently on what they would accept. And they may be more risk averse or more risk.
Yeah, and right now, since business is relatively low for a lot of investors, I'm seeing them do a lot more than they have, which is great. So, yeah, at the end of the day, just bring the options and we'll. But, hey, thanks so much for that. We'll be here every week, so, you know, but, you know. Appreciate it. Thank you.
So next week, we're gonna have Lloyd George, is actually one of my ex-students that I called it. He is with Dow First Labs. He also works for a company you might have heard of, High Level. They are a CRM company that other CRMs are actually built on top of, almost like Linux for CRMs. So he is very knowledgeable on running ads. My personal experience with him was when he ran my ads and set them up, they performed a lot better than when I ran through the Keller Williams CRM that was supposed to be linked to Facebook, everything. So I actually got more traction with his help. So that's why I've asked him to come speak. He's actually going to do class once a month, just on social media, setting up the ads and those types of things. So he'll be here next week, same time, same place. And then I think this is just Amy and I's information again. If you ever need anything, you can reach out to us. And I think that's it. Anybody else have any questions? So next week we've got social media, and then the next week will be actually CE on marketing for real estate. So we'll have back to back on the social media. All right, appreciate you guys coming. I will get the information, the calculator from them, get it out to you guys ASAP, trying to end of the day or by. Appreciate you guys. We'll be here next week. Thank you very much.